The broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. Goodinvesting.com Thursday to everybody. How's everyone doing? William, Vlad, Umair, how are you? Tony, Russell, how are you? Ping Pong, Mark, Leon. Leon, good to see you. Yeah, it's nice to see you. Stalin's here. Is Hitler here too? We have Stalin, Hitler, Mussolini. Hi, William. Thank you, everyone. All right, let's have a great day. I want to welcome our viewers on investing.com. I want to start off with silver here. This is a daily look of a falling wedge. I'm taking a shot here. In fact, yesterday, I think we are getting very close to a turn in the gold silver ratio. I think it may have shown the beginning signs of a turn yesterday. I'll get to it after a few charts, but taking a shot here, wrong under these lows, tight stop, 25 stop. Looking for it to take out the top wedge line, and then that's going to be kind of a wall for it to get through should it not fail from here, 1488. Over this, rising wedges can retrace, falling wedges and rising wedges can retrace 100% of the move. So technically, there is potential for us. I anchored it right here. I anchored it right here at 1620. And the gold also looks okay for a shot back to 1300. It would probably take further downside in the stock market for that to happen, and also the dollar to fade. So let's go the dollar. I'm a little underwater on some positions here. Caught it last week, and my plan was to sell fib retracement. So I have one here at 50% at 61.8. I haven't tried the 78.6 level yet. I may in the next day or so. Here's a 1, here's a 2. We may get a 3. I'm not going to fight it over this high because you start taking out this high. I know I have a lot of fibs here. We could be at 99.20 to par in a heartbeat. So taking a shot here for a possible dollar high. We'll see. We need some action back under 97.90 to show that this market can have something like this from a lower high. So monitoring that. Um, DSI on euro is way down there. The other scenario is that euro makes new lows for the move. It's not far away, and we go towards 1050. And if that happens, just looking at the weekly, so there's a parallel line down here at 110. And then longer term, maybe this is where it's going. But taking a shot here, we'll see if we get a turn. If not, as I said in the dollar, I'll be out above new highs. Wanted to point out something interesting in crude yesterday. Crude led the way down, right, before the S&Ps, you know, top here. The $60 mark is going to be very important. This was a low before we had a 61.8 back to 64. So so far, this looks like a 1, a 2. Maybe we get one more drive, but back above 60, I'd be careful about being bearish here. I have much lower targets, but I wouldn't want to see it close back over if I'm short 60 to 60.50 in the crude. Yen having a decent week despite risk off right here back at some pretty important resistance at 980. I wasn't looking for a low here yet. I still think that we could get 108. And just wanted to touch upon something I've been talking about for several weeks that finally is manifesting in yields before I hand it over to Blake. So we went right to the 3 drive line, almost to the pip here. I've been saying for a long time since we went up here that this pattern was incomplete, that we needed another low for a third drive. We're getting it here. I know some people that think we'll trade under 220, maybe 213, 210, which would end up giving us a throwover similar to what this is 10-year paper, right? Here's 30-year paper. So we've already had a throwover in the bonds right here. So let me do a little mentoring on throwovers that, if you're playing these lines, they make you throw up or regurgitate. Like if you're long against the line, now it's underneath the line. What you do is you just let it do its thing, whatever it wants to do under these wedges. Everyone with me on this? Hi, Russell. And then back inside the formation, just like I showed in silver, we've had a few attempts for it to trade back underneath here. So let it go to wherever it's going to go, then back inside the wedge line, that activates the falling wedge again. So I think one of the bigger trades setting up June, July, August, September is going to be a short in the bond market and a big long in US dollar yen. So I really think that the market, especially with this recent sell-off, and if it continues in the S&Ps, a lot of people, real bullish bonds and the dollar, I think they both have 90 readings. They're at 90 on the DSI that I saw yesterday. So very crowded trades, a lot of people, and people have gotten pretty negative stocks, or most of the indices are back under 50%, which I haven't seen for a long time. So this is, I think, is going to be a great trade setup, because I do believe that once we put in a bottom, that yields can come back and test the ranges that freaked out everybody at the end of last year. Okay. Olivier is looking for 91. Not sure what bond he's talking about, but this is something to keep an eye on. And actually, this still shows the inversion going on, because the 30-year paper is weaker than 10-year paper. Everyone see that? 30-year has an overshoot of the 3 drive. 10-year, it's right there. 10-year may have an overshoot, but that's something really to keep an eye on. Everyone thinks the stock market is huge, but if you put all the stock markets together, every bourse around the world, and combine that market cap, 91. Okay, thank you, Olivier. Uh, they would all be dwarfed by the treasury market. That's why when people talk about the Chinese dumping bonds or someone dumping bonds, there really isn't that great of an alternative because of how deep the bond market is. And we all know what's bigger than the bond market, right? What's bigger than the bond market, which is huge and massive? Anyone know? So stock markets dwarfed by bonds, and bonds are dwarfed by, that's right, Forex. Okay, so Forex, that's the deepest market. That's why what happens in currency, it's kind of like the linchpin or the fulcrum that all these other asset classes spin around. So if you become a good FX trader, you're going to have um, insight into other asset classes, and it'll help you with correlations and what you should look for, like Canada with oil and Aussie with what's happening in China, and base metals and precious metals. And really, the best way to educate yourself is to take advantage of this sale. It's still running. I think tomorrow's the last day. And this would give you a chance. We have a private member chat room with over 100 people in there. I'll have Blake show it when he gets in here. And gosh, we get to hear Amanda a few times this morning. These guys, great website. Really, the only reason you would need to leave our website is to go to your broker and execute a trade. Okay, so anyone know what I teach to become better? Hey, Ricardo, how have you been? What's one of my main teachings? Surround yourself with traders better than you. So you could do that in members chat all day long, and you could learn a lot about the markets being a subscriber. And you could learn a lot about different methodologies. Elliot by Grega, Harmonics by Andre, Basic Technical by Blake and Steve, Candlestick by Steve, and Blake, and Macro from Stelios. So, you know, I believe in this place. I think it's the best group of talent in one place on the net. And very few combine different methodologies. And so you could look for confluence between the different methods to, like you look for confluence on your charts for more than one reason to get into a trade. And that actually, when different methods are pointing towards the same thing, gives me more confidence in the outcome. So I recommend you try it. You're not going to find a better team, I don't think, than what we have here. Here's our team. Blake, Rega, Stell, Steve, Pinkert, Perry, Franco, and Paulie's doing a great job. He took on double duty, and he's prepping people for the Asian session in the afternoon here in the U.S. So you have a wrap up of what happened in the U.S. going into Asia. Amanda's an excellent trader. Andre's excellent tactician with his harmonic work. Pretty strong team. You find a better team out there, let me know. It's going to take you a while. In fact, you may not find one. So that's my view. Also, you can participate in a reimbursement program with our sponsor at Forest Park FX. Everyone should have more than one account. Maybe you have one account for day trading, one for position swing trading. And these guys, if you're outside the US, your trading will pay for your subscription, not prescription. And if you're in the US, you'll get a check, help you with car payment or something. Okay, so that's my wrap. Good hunting. We have a great guest today. He's a contemporary of mine. Uh, Anyone ever hear of Anthony Crudele? Anthony has his own show called Futures Radio, and he too is a former floor trader in Chicago. So stick around for that interview. Looking forward to talking to Anthony about his motivation behind his show. We all know I bring in guests for selfish reasons so that I have more information every day from some of the best traders out there, and also, yes, to edify our community, because our mission here at FACE is to build up and edify traders every day. And when we wrap up FACE, almost every day I feel like we've accomplished that, because for free, you get great ideas from Blake, actually some mentoring. I throw out a few things. Steve gives one of the best reviews of the whole board and tries to answer everyone's questions in here before the interview. And Stell gives you the macro news, what's happening overnight that can move markets. And at times we have Grega dropping in here to share his Elliott view, and Andre and Paulie. It's a team, and there's no I in team. I. I say people that talk in I's all the time. I did this. I called this. I went there. I say they have an eye disease, and not what you see out of. Anyway, there's no I in team, and we all cover for each other when necessary. And everyone in here really has your interest at heart. Okay, we'd like your business, but we don't need it. Okay, and we want to help you become better and succeed in this business. Okay, so you have guys that are successful that pay their $4,000 mortgages pulling pips out of the market. So good luck pulling pips out of the market today, everyone, and stick around for the session. And I'm curious as to what Blake has on his radar this morning on investing.com Thursday. Blake, what are you focused on here today, buddy?
Hey, good morning, Dale. Can you hear me all right?
Yeah, you're loud and clear, bro.
Okay. I'm really just focused on the bond market right now, and we were,
There it is.
you're talking about yields, and I'm gonna actually I'm gonna show you a couple of things really quick.
Cool.
And let's go over to the 10-year. And Goonlock actually tweeted, which may have marked the high yesterday. He was tweeting about yields yesterday. And if you look at the 10-year, we actually hit the 127% extension of the last move lower, the 78% retracement of the 2017 highs to the
Yeah.
lows or 2018, and so we put in a pretty big shooting star gravestone doji. So
Nice divergence there too, Blake, and a
yeah,
three drop.
yeah, and that's a very good eye, Dale. If you look at the daily RSI, got some really nice divergence there as we hit new highs. So I would be expecting that the bond market starts to pull back the next couple of days. Now I was just actually having a conversation with the guys in the Greenwich office. For those of you that don't know, I trade for Gellos Capital. So I was chatting with those guys, and we were talking about how a lot of this flow yesterday, the end of day flow that you saw in US equities and that you saw in the bond market at the end of the day yesterday, right here, this is all flow related. But remember, we are also at the end of the month. So at the end of the month, for what it's worth, it's the end of the quarter. We'll probably continue to see these end of month, end of quarter flows coming through the market for the next couple of days. Remember, today is the 30th, tomorrow's the 31st. So what I'm trying to say is there's probably going to be continued equity market buying today, probably some bond market selling today. So what does that mean for currencies? Well, for currencies, that means that when you see the bond market show some sort of reversal, and if I had to guess, here's the 10-year, and you look intraday, we probably got a little bit more upside. Something that looks like this. Let me just draw it out for you guys. Something like this, and then you start to see another leg lower in the bond market, whether it's a bear flag or something. But imagine this happening over the next couple of days. You see this continued selling in bonds as bonds kind of reset, maybe retest this breakout point somewhere down here, which seems pretty logical to me. After this big of a move, that doesn't mean that it's completely reversing the bond market move. No, it's probably going to revert to the mean, come back towards its uptrend and retest this and bounce. But if that happens over the next couple of days, what does that mean for currencies? Well, for currencies, that probably means that yields are going up, as Dale was just talking about, the 10-year yield. But more importantly, what that probably means is equities continue to bounce. You can see equity markets are bouncing right now as we speak. Wow, what just happened? Hold on. Something just. Trump says he doesn't see. Hold on, this is. That's how Congress can impeach him. Yeah, that shouldn't be completely moving the market, but we are seeing a little bit of buying in risk. Wait, hold on. We got a Reuters headline, which I don't have right now. So Trump says U.S. is doing well with China. China would like to make a trade deal with the U.S. So that has just come out. So Trump is on the wires, and we're just seeing a little bit of you see the Aussie yen is coming right back down to the breakout point. But if we see a move up in yields, you can see equities are starting to get a little bit of a lift here. All right. Stand by. I gotta do some things. So what I'm trying to do is I'm trying to buy. I'm long some Aussie yen. I'm actually playing on the long side on the pound yen. If you guys read the chart of the day yesterday, was talking about. I believe it was the pound yen. Let me just let me make sure about that, because I do so many of these. Let's go to the blog. Was the pound yen yesterday? Pound yen. Oh no, it's the dollar Canadian yesterday. Sorry, it was the pound yen from 2 days ago. So you can see this is a descending wedge, looking for a reversal here, and so anyway, so what I'm looking for is I'm looking for a little bit of a lift here, and if we get a bounce in equities, yields start to rally. These yen pairs, Aussie yen, New Zealand yen, Canadian yen, pound yen, euro yen, they all should continue to bounce. Now, if you look at the daily charts of all of these charts, like here's the Aussie yen or the Euro yen, for example. The Euro yen, we would threaten a false breakdown if we get much higher than where we're currently at. I mean, if you look at the Euro yen, we are trading at 122.13. A break above these highs, which is 122.25, and this was previous support. We start getting back above that, and we might squeeze a little. So this is all a, 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 a signal of possible bounce and risk, which, like I said, it may last for a couple of days. And if it lasts for a couple of days, you don't want to be caught on the wrong side of that. If we continue to get a little bit of a bounce. Now, does that mean everything's reversing and we're gonna see some sort of long-term reversal in what we've been seeing? Like I look at this Aussie yen, I think the risk is that we bounce back towards the 77 yen level. Will it change the overall outlook of the Aussie yen? Probably not. If we get a rally towards 77. No, I mean, people are going to be looking to sell on bounces, and I think that that's logical. But what you don't want to be caught in is you don't want to be caught in the crossfire if you start to see these types of moves. And I think that these yen pairs are all at risk of a move higher if yields go up. Now, yields are not going up right now. Actually, if you look at yields as they're moving, they're actually moving a little bit lower at the moment, which is surprising because equities are bouncing. So we'll see if this continues. But I think a lot of this is, again, end of month flow. You got Donald Trump is trying to talk up things a little bit. He's probably a little concerned that equities have come down the way they've come down off of these highs. But remember, the S&P also yesterday stopped at the 200-day moving average. We're also at the 78% retracement. The S&P and the stock market have a lot of support down at current levels. Do I think that we're eventually going to break down? If I had to guess, are we going to break through this support, through the 78% retracement? Yes. Is it going to happen right at this moment? I would think that we bounce for a couple of days and then make another stab at it. This is a pretty big level of support between the confluence of the 78% retracement. This is the 200-day moving average. If you guys can't see it, I'm going to draw it out for you. You can see the 200-day moving average comes right through here. So, being that it's pretty big support, we probably need a couple of tries to get through it. Yesterday was the first stab. We might need to, bounce a little bit, and then before falling. When I see big levels of support, I kind of explain it like imagine this. I'm going to draw it out for you guys so you guys can kind of think about what I'm telling you here. Imagine this is a table. You have a ball, right? Okay, you have this ball, and it's a bouncy ball. This is the end of the table. All right, the ball bounces and it hits the table. Support. It bounces. The bounce next time is not as big. And then it bounce, and then eventually it rolls off the table. Well, when you have big support, in the market, a lot of times you get that. You get a bounce, then it tries it again, doesn't crack it, tries it again, and then eventually it rolls over. Same type of thing. It's the same type of concept. So does the bouncy ball roll off the table right now? Yeah, it might. But can it bounce from here? I'm sure it can. And that's why I think that taking into consideration, we are at the end of the month. We do have some flows that we're going to have to contend with. And most of them are probably selling bonds, buying equities that, we might get a little bit of a bounce the next day or two. Anyway, one of the other things I wanted to discuss before I bring on my colleagues, I got Steve and Stelios that are waiting to talk to all of you, especially those of you that are coming in from investing.com, is I want to talk to you a little bit about the dollar. So yesterday, the daily sentiment index came in on the dollar index at 90. That's a very extreme, lofty level. What that actually means is when a DSI reaches 80 or above, it starts to become extreme bullish sentiment. Once you're above 90, that's really extreme. Now, I have seen them at 92. I've seen them at 94. It just doesn't happen often. So once you get above or 90 and above, which the dollar index is 90, then you start to risk that sentiment becomes too extreme. That means everybody's on one side of the boat. When everybody's on one side of the boat, the chances of the boat capsizing becomes quite high. So if everybody's bullish the dollar right now, the risk is that the dollar might pull back a little bit. And when you take a look at the euro, understanding and I have to let me take a step back before I say this. I am not a euro bull. Actually, let me further expand on that comment. I'm not a eurozone economy bull. Okay. I think that Europe is going to have a lot of issues politically moving forward, but I do think that the risk of a euro bounce is quite high. And if you look at the just the chart pattern that we're in, we have a descending wedge. And we're probably at the lower end of the wedge. The risk might be for the euro to bounce back towards 112 from current levels. So, especially taking into account the DSI is very extreme. You take into account that equities are bouncing. If equities are bouncing, typically the dollar comes under a little bit of pressure. That means that you might have the euro dollar back at 112, by next week before we resume this downtrend. So, if it's down at 111.30 and we get a bounce towards 112, you got to be careful getting caught on the wrong side of this if we see some dollar weakness today. So again, end of month flows right now are probably going to be more stock market bullish, bond market bearish, which would be positive for yields. It's going to help the dollar yen. It'll probably help all the yen pairs. That means that the dollar itself might be under a little bit of pressure. However, what we've got to get past this morning is we've got to get past the GDP data that's expected to come out. You can see the GDP data via data flash is looking for 3.1%. Previous was 3.2%. I'm just hoping that we put in a number at 3% or so, but if that comes in a little weaker than expected, we could see a little dollar selling come in. All right. With that being said, I'm going to pass it over to my colleague Steve and Stelios. Good morning, gentlemen.
Good morning.
Good morning, Stelios. Good morning, Steve.
Good.
How have you been, mate?
Good. I'm bright-eyed and bushy-tailed this morning, but hey, I want to pass it over to you guys. But as I'm passing it over, I just want to mention. Remember, we have extended our Memorial Day offer till the end of this week. We only do offers maybe 2-3 times a year, maybe sometimes 4. It depends. I think the first year we did it up 4 times. So take advantage. If you want to be involved with ForexAnalytix, this is the time to do it, because the next time you see a special might be October, maybe December. Who knows? It's whenever we feel deemed necessary that we should do it. But right now, we've extended the sale because so many people were on vacation. They wanted to re-engage coming off of vacation this week. So make sure you take advantage of that and just go to ForexAnalytix.com just to get the special pricing. All right, guys, have a great one.
Thank you very much, Blake. Especially the monthly offer. You get 1 month for free by buying 1 month. It also gives you like 60 days of access, which should be enough for you to, realize the benefits of subscription. Stelio, from what I see here, in 35 seconds, we have the revised GDP number, right?
Yes, a couple of other minor numbers as well, but GDP, good trade balance.
Yeah, US initial jobless claims as well, which rarely moves the markets, especially with employment being where it is. So I'm not expecting that to move. Current account as well for Canada. Yeah. 10 seconds before the release.
I like that. I really like that. The warning. Okay,
let's see.
Here we go.
There we go. As expected. Everything as expected, actually. Yeah.
Yes.
Exactly. Even U.S. initial jobless claims exactly on point, 215. So that should not move the market in any direction because we got exactly what the market was expecting. Even the revision was for previous months, U.S. initial jobless claims was less than minor. Okay, so that's out of the way. We can go on with the rest of it. As we said before, this should not move the market. So, Stelio, what else did we have late yesterday and early today?
Not much. We had a couple of comments regarding the UK and the never-ending Brexit story.
Saga.
We had Saga, yes, is going to be lengthier than Star Wars. But anyway, Germany said that they're going to veto an extension beyond October unless the UK makes major progress. And that now takes us to what is major progress. It's all these statements, they move the market a little bit. When that statement came out, the pound sold off like 10, 15 pips. Then it came right back because it's all quite vague. But that was one thing that was said today. Also, Jeremy Corbyn, the leader of the Labour Party.
Yeah, I saw something about the Brexit referendum. Perhaps he's rethinking about it. Does that have merit or is it BS just to keep the headlines rolling?
No, he has been saying that second referendum would not be out of the question. Whereas
I know
other parties have. Today, he did say that I would go to the EU and ask them to seriously consider a customs union. So, I think Corbyn, as a politician, he has to keep all his options open. And so we're getting all these headlines of all these various people saying all sorts of stuff. To me, this all should be almost like a non-event because it's just statements. At the end of the day, we want to see what's going to happen, actually going to happen when the time comes.
We've had more than enough of statements having to do with Brexit and US-China trade
you
deal.
saw today, right? You saw 10 minutes ago, Trump tweeted that.
And Algos went nuts. Yeah.
Yes. So as soon as the stocks, the S&P goes below 2,800, the tweets start coming in. But yeah, I think the only point of interest from what happened overnight was from New Zealand, where we had the budget, and when this New Zealand Labour government came in power, I said straight away that my bias for the Kiwi would be negative, because this government would be fiscally loose, in my opinion. Because of the way and the first signs that Jacinda Ardern, however you call her name, has showed, they were all quite in that direction. And now we had the budget, and it's in theory, it's a very good thing what they've done, because they're actually targeting well-being of the people rather than actual numbers and GDP and this and that. They're targeting. They have what they call the world first well-being budget. So basically, they are going to spend quite a bit of money in things like mental health and addiction and things that, obviously the people need. But what is the result when you're looking at currencies? What's the result? Well, I think that this is going to be fiscally, it's not going to be the most prudent thing to do. So I think that's going to put pressure on the Kiwi, because they're going to have to fund all that. And let's see how they're going to do that. More debt or more whatever they're going to need. So that's the budget from New Zealand came out yesterday. It sounds very good as a principle, but in practice, I think it's going to bring pressure to the Kiwi.
Wait a second. Do you want to explain a little bit better this well-being budget? I mean, how exactly does this? How is that quantifiable? I mean, well-being is just it sounds like a wish. Yeah, well-being. Okay, fine. So how does that then become numbers and targets and amounts to be spent?
Well, I don't know how you can actually measure that, but they are putting aside quite big amounts for that. So they're putting aside $2 billion New Zealand dollars for mental health, and they're putting aside half a billion for.
Last time I checked, mental health was part of health services in the health budget. So I mean, if that's a definition of well-being, yeah, I don't think that there is any state that or any government that says that they're not going to fund like mental institutions or whatever is needed for that.
Yeah. Anyway, this is the direction, and it's as I said before. No, if I was living in New Zealand, I would say, yeah, this is a good thing. Because obviously you want to take care of the people, but in terms of the currency, I think that's the effect it's going to have on it. So I remain skeptical about the Kiwi, and I am looking to sell it.
The road to hell, and in this case, fiscal hell, is always paved with good intentions, right?
Yeah. I mean,
measuring performance in combination with money spent, though, is what matters. Let's see. We're going to see about it. Okay,
yes.
Great. Anything else?
No, that's it, my friend. It was pretty quiet overnight, actually.
Indeed. It has been so far. It has been a quiet day. In essence, I haven't seen something today that has really moved significantly enough to change the technical picture from what we had yesterday, with the exception of some like exotics, like for example the Turkish lira has moved roughly like 2% against the USD. Everything else is more or less where it was. We have questions here about Kiwi, in particular Kiwi against the US dollar, Kiwi against the yen, even Kiwi against the Aussie. So let's start from going through those Kiwi pairs, and we can even have a look at, because we didn't do that yesterday, of some of the cross rates with euro and pound against some of these commodity currencies. So let's begin by having a look at the Kiwi USD. So now the situation here is quite simple. Okay, I'm absolutely not convinced that this is a descending wedge that has broken to the upside, because I still see no momentum. So, I drew that as a descending wedge, but I was very clear about it that, I'm not paying that much attention to this formation. I want to see more than just a formation, because, there are occasions that you can draw a formation and, that's not actually the formation that's in play at that moment, right? So this might prove to be something else, like a descending channel, and we will keep having devaluating this currency pair devaluating for a period of time to come. So, if this is to be the case, though, if this is to be a descending wedge, we should see, an acceleration higher from more or less here. You don't want to see a lower low than the low we had just below 65 cents. So I would be very cautious with Kiwi longs in this case. I think that a move above 65.70 would at the very least be needed to be a little bit more optimistic about the upside, in which case I would then be looking for a move towards 67.10. That's a nice horizontal support resistance area. The 200 daily moving average is also there. So I would be very cautious. There is the possibility that this can work. It definitely has an appealing risk reward ratio, but in my opinion, so far with what we have in hand, is a low probability trade. Same situation here with the Aussie. We had a little bit of an upside, like a couple of days of upside last week. And since then, we've spent like 4 days. Sometimes the candlesticks don't lie. As you see, we've had 4 days of consecutive pin bars. Pin bars are textbook indecision candles in this case, especially when you see them, being contradicting to each other. I mean, we had like an inverted hammer, then we had a hanging man, then we had another inverted hammer. So bottom line, the market is really stuck here. Now, I wouldn't be surprised if there is, a little bit more upside, since we had a couple of days of upside before we got to this little indecision zone. But even if that's the case, unless we break above this horizontal support resistance area at 70.30, 50 DMA is also there at the moment. I would be very, very cautious. Probably a retest of that zone until proven otherwise is going to be a selling opportunity. Now, of course, you never know with the markets. That's why you need to be there and monitor every single day, meaning you might get, some kind of a pick up in momentum, and we might see like a move higher that is starting to to form something totally different. But so far, with what we have here, I think it would be responsible for me to to be bullish and being comfortable with that point of view. Now, having to do with Aussie against the Kiwi, there are two trend lines I'm monitoring here. One of them is these rectangles, because we have this rectangle that you see here. Let me draw it for you. This was support, right? And this is resistance. So we have this rectangle. Its resistance is, which also confluences, by the way, with a 50% fib at 1072.57. It says here to be exact, but 72.50, let's say 72.60. And this is an area of resistance for sure. Now, before we get there, though, first of all, we have to um, uh, just pay attention to the fact that we've already broken, above this descending trend line. Now, the reason I'm paying less attention to it is, first of all, we had a spike above it, so it makes it less important. Second of all, as you see, it only has like 2 points that it touches. The third one is like arbitrary. So, you can easily draw a line between 2 points. Now, does this mean that it is a significant line for the market? No, it doesn't necessarily mean that. So I would be a little bit cautious by turning bullish because we broke above it. Of course, that should be enough to tell us that we're moving towards that rectangular resistance that I was talking before about. Keep though in mind that we're currently exactly on the 200 daily moving average. So that's another hurdle for price to pass through before we get there. Bottom line, uh, I would be neutral to bullish. Definitely, I wouldn't want to be bearish as long as we trade above 1053. Now, it's up to you if you want to be bullish in advance, for a move towards this resistance, and believe that then we're going to have a continuation higher, which is a likelihood. Okay, or if you want to be more patient and wait for a breakout above there. Now, one thing that would, let's say, increase a little bit the bullish bias with this breakout here is the RSI. The RSI also had like a descending trend line resistance. We broke above it, so that might be a little bit of a plus for the bulls. Now, having to do with the Kiwi yen, more or less the same situation as the one we had with the Kiwi against the USD. Only in this case, we haven't had a break above the descending wedge. This is a descending wedge. That doesn't mean that it cannot break to the downside and even accelerate lower. Okay. As I was saying yesterday, for me to turn more optimistic about its fate, I would want to see a break above this, then a break above this horizontal support resistance area, roughly at 72.30, and then we can start talking about bullish scenarios. Until that happens, I would stay away from it. I realize that selling down here, doesn't really give you a risk reward that you can use to, to have a viable risk and a viable target. So, you either want to jump the gun and be long, which is quite dangerous, or you stay on the side and wait for a deeper, for stronger rebound. For example, as you see, we have a gap here. Oh, sorry. As you see, we have a gap here. So, for example, if you want to be short here, you might want to wait if that happens for a move towards filling this gap before then looking for shorting opportunities. Okay, because as I said, there is no risk reward for you to jump on the market short at the moment. There is a risk reward of being long, but the chances of that working out are low. So now let's go have a look at a few of the crosses, and then I'm going to look at the rest of your questions. So Euro Aussie, definitely moving lower. You can see this. But is this so far anything more than just a consolidation or a correction to the previous uptrend? No, so far it isn't. I'm monitoring this as a potential bull flag, for example. Of course, if that's the case, we need to see market participants, start buying it, quite soon, because if it accelerates to the downside, then we're talking about a totally different kind of formation. Unfortunately, with corrective formations, it's not easy to guess in advance how they're going to unfold. So, for example, let's say if you wanted to have a look at this 3 days back, you could easily assume that, okay, this might be a bullish triangle because you would have less price action, so you might have assumed that this is a triangle. Now we know that it isn't a triangle because we've already posted, a lower low than this one, but it can still be a flag, right? But let's assume that today we have like a strong sell-off, then you know that it wasn't a flag. But what I'm trying to say here is, which I've said in advance, you can't know how a corrective move is going to unfold unless it has already spent, several days forming something that is now easy to recognize. So that's one of the difficulties in trading corrections. Okay, you can only be certain, for example, if you are willing to lose some of the potential reward. So, for example, let's assume that this indeed plays out as a bull flag. How can you be sure it's going to be a bull flag? Only when it breaks this flag's resistance. So then you can say, okay, yeah, this was a bull flag, certainly. So, we should be moving higher from there. Of course, in order for you to get that, there is a trade-off, right? You risk more of the potential benefit to increase probabilities. So it's a matter of preference. Usually I like to go with not always, with higher probability. Sometimes I also like to jump the gun when I'm very confident or when we have like a very strong confluence of factors. But each one has their own trading style. Now, Euro Kiwi. Euro Kiwi, I was monitoring this ascending channel, and as you see, more or less, let's say it's barely holding still. Okay. As you see, the pullback has been softer even than the Euro Aussie. So far, nothing really bearish here to see as well. Okay. Of course, it is something to consider the fact that we got rejected exactly from that spikes high that we had there. That is definitely something to take into account. But does this mean that this is a double top? Absolutely not. I mean, just because we pulled back like a few pips, that immediately becomes a double top. No, in no way that's the case. We need to see more technical evidence to to treat it like that. Okay. Kostas is giving us a link. Let's see what that link is, Costa. Italy to activate its parallel currency in defiant riposte to EU ultimatum. The Eurozone elites are looking straight down the barrel of an Italian economic revolt. Do they take a page out of Varoufakis' book? They've gone nuts, literally. Doing over a country on its knees, said Matteo Salvini. Yeah, but it's going to be on its knees if you start doing shit like that, if you're asking me. After sweeping the European elections even more emphatically than the Brexit party. No, the majestic eye. He's already master of Rome. The League can no longer be contained even by Italy's ever-ingenious Mandarin class. His party commands 30% of the country together with the Eurosceptic confederates. Okay, interesting. That is going to be a very, very interesting thing to see because Greece tried the same with Varoufakis BS, but once it realized that it was literally on the brink, just a few hours away from being kicked out of the Eurozone and going in, becoming Venezuela, had to do a U-turn. Of course, it is very different for Italy because a situation with Italy would be much harder for the Eurozone and the European Union to handle. So it is interesting to see how that's going to work out. Martin says, whoa, so you're not in the camp with pattern in play Blake posted in Kiwi. Martin, as you know, we don't influence each other. As I said, Kiwi can actually move higher. And there is an appealing risk-reward ratio here. Would I be buying it here for myself? No, I wouldn't. Metals. Yeah, thank you for reminding me. Oh, by the way, before we go to the metals, let me make a small mention here to the Canadian dollar. As you know, we had Canadian data yesterday, BOC. We had a spike like it was a couple of minutes afterwards because initially it looked like a non-event. Then we had a spike higher. I guess a lot of people got trapped being long there. And now we're retracing back within that range that we were trading. Now, does this mean that this was a false break higher? Not yet, if you're asking me. I would be a little bit cautious. I wouldn't yet characterize that as a false break higher because we can still move higher from here. But if we move lower from here, for example, if we move below, let's say 134.30, then I'm going to start being very skeptical about that move. And yes, it will start looking like a false break higher with whatever implications that has to the downside. Having said that, it still looks appealing to my eyes if we get another move to the upside to test this confluence of resistances at 136.50, 136.60. So I would still not abandon the bullish case scenario, but even in that case, I wouldn't be a buyer because, as I said, for me, this 136.50, 136.60 is probably quite an appealing selling area. So I would rather see a move there, and if I see a reaction I like sell, then be buying here. That's my personal preference. Okay, I just wanted to have a look at it because that happened after the webinar yesterday. Cat Yen also, if you want to have a look at it, it has broken below this triangle, which is a bearish development. I expected a continuation lower when we were rebounding there. But I have to note that this confluence of the 61.8% fib and this horizontal support resistance area is still holding. So, being close to it, selling makes no sense because, we know this is a strong support area and, that always has the chance of holding again and again and again, right? So, bottom line, there is no risk reward to sell it here, but a breakdown below 80.45, I think is going to produce follow through, and perhaps selling the breakdown is a viable method of trading this. Now, doesn't mean that this is your trading style. I'm just throwing out things because there are some people that like to trade breakouts, some people that want to fade move, some people that want to trade short term, some people that want to trade long term. So I'm just saying what I see here. That doesn't mean that all of those scenarios fit my personal trading style or yours, right? Metals, we said, yes, let's have a look at them. Unfortunately, nothing really has happened since yesterday. Let me start by going through crude because crude also had an interesting move yesterday. That's why I always wait for daily closes. If you remember, I'm always cautious because we have this webinar early on the day having to do with the American session. Yesterday, I said multiple times that if crude breaks down from this 57, 50, 58 area, that's going to be a very bearish development that is going to probably be pointing to more risk-off environment. But as you see, although it was looking like doing so, the daily candle ended up being a dragonfly doji. In essence, a doji that price was the same at the close as it was at the open, but that was at the highs. So, that is definitely not a bearish candle. At best, you can call it a neutral candle. Now, does this mean that we're going to move higher from here? No, we still have no evidence. This might still be part of a consolidation that we have here after quite a strong move lower. What remains, though, as a fact, is that this horizontal support area, which those of you that are here frequently know that has been on my chart for a long time, and that was also my target for taking profits on my short, is significant. So I can't really turn bearish, although it still looks bearish in my eyes, as long as we trade close to this support area. Okay, now, having said that, let's go back to the metals, and situation has not changed for gold. So gold trapped below this descending trend line resistance, and most importantly the 1300 area, previous high here, and 1265. In my opinion, trading gold between these two areas, 1265 and 1300, for my trading style, for how I view the markets, makes absolutely no sense. In my opinion, it's equivalent to flipping a coin to see if you're going to make money or lose money. So I would be more confident of what's happening here only once one of these two areas, break. Okay. Silver might be a descending wedge, but we might have overthrown this descending wedge. But for me to believe in any bullish scenario, I would at the very least need to see a move above 1460, unless that happens, and preferably 1480. Okay, preferably 1480, but 1460 is going to be a first sign. Until that happens, you have no reason to disrespect this move lower, with the next area of support being at 1390. Gold silver ratio still pushing higher. Usually that's a bearish sign for metals. And platinum still getting destroyed. Next area of support, as we called it some time ago, is the 778. As you see, previously acted several times as support. And palladium still unwilling to do anything after this little rebound, has spent a couple of weeks consolidating in a rather tight range for its preference. So no reason to believe that this corrective move lower has ended. Now, if we see an acceleration higher, then we can assume that by hitting this horizontal support area, which was my target, we have actually finished a correction lower. But inequality of legs would point quite lower from there. I also like this confluence of supports roughly at 1135. So who knows? We might make it there. I mean, there's still a decent chance. Now, copper, that I've turned bearish since we broke down below this 285, 287 area. If you remember, even when we were rebounding last week, I told you that unless we break above 272, keep looking lower. We actually found resistance there. We are still pushing lower. And as I've said multiple times, I don't see any real support until we make to 257. So, 257 it is. I mean, 257 closest support, and 272 remains resistance. Now, a very brief, I looked at them yesterday because for me they were very relevant yesterday as well, and I've been paying close attention to them. Keep in mind that the Bund is literally a breath away from the all-time highs, which is at 168.41. So literally a breath away from it, and that's something to consider. Irrespective of the very bullish sentiment, which is undeniable, keep in mind that um, uh, both of the benchmark bonds, the bonds and the treasuries, remain in an uptrend, and until we see evidence of, a reversal, you need to respect that. So it is what it is. Here, the bonds moving higher, and here are the treasuries. This is actually what we drew when we were correcting lower, and so far it has played out perfectly. Next area of resistance, the 161.8 at 126.5, roughly. So it is what it is. Yes, sentiment is extreme for the bonds, but it can become more extreme before we see a reversal. Okay. Same with the dollar index. Somebody can already start envisioning a possible triple top here. And, it might as well happen. But if you remember, I've kept saying, don't turn bearish unless you see this ascending trend line break, because we still don't have evidence that this uptrend is over. Now, we've been losing momentum for some time, and this is something you should definitely take into consideration. But, should you turn bearish yet? No, not yet. Coach.
Yes, buddy, I need your help. Anthony Crudelli called in, and so I can't find him among the attendees.
Okay, so you would need my help with spelling?
No, with finding him. No. Do you see him anywhere?
No, I'm asking with spelling because, as you know, we can search,
Oh, Anthony Crudelli, Crudele.
I found an Anthony, but not him. I also type with his last name and I don't see it.
Yeah, I don't either.
Yeah, is there any chance?
He says he's registered on Twitter to me.
Okay, so can he?
He says he can hear me speaking now.
That is interesting.
So I don't know.
Let me expand the attendees list and go then the old-fashioned way. I'm gonna just open it full screen on another screen, of course, and start browsing through it. Did he call through using phone?
Yeah, use a phone. He called in. Yes.
Okay, that's good because that's going to make it easier for me to find him if that's the case.
Should I give him a different number for him to call in on so we could see him?
If he can hear you, it means
he can hear me.
It means that he called in the right number. The thing is that so far here, I don't see anybody that has actually called in. I mean, I see
we don't show it, Anthony. Why don't you hang up and use the number that's on the page to come in? Try it again, because we can't find you to make you the presenter or
I don't see
panelist. I can't make you a panelist, so why don't you try that?
Any chance he has a computer in front of him and he wants to join?
I guess he's on the road. So, but we've had call-ins before. And,
of course we do. Of course we do.
And I've been able to find him. So are you doing that, Anthony? I see your messages on Twitter. I think we're also hooked up on Skype, but okay, I have my Surface and I can try using that, just don't have a headset. Okay.
Okay, that should be fine.
Yeah. Live TV, huh? This is what it was like in the 50s.
You know better than I.
And I'm sure shows got canceled because the producers couldn't get it together live,
My father was born in 1950 and my mother in 1952, so I would definitely not know about the 50s.
All right, son. I get it, son. I was born in 53. I could be your dad.
Absolutely.
Anyone want to adopt a 38-year-old kid named Steve Bulkey? Because I really aspire. Your mom didn't tell you I was a milkman in Greece.
39 in 12 days.
Oh my gosh! So we're both schizophrenic, bipolar Geminis. Well, you know what, Steve? That makes it easier for us to, not be stubborn about directions in the market, because we have that dual personality. I could be a bear.
We have a comment here that is correct. Is there a chance that he joined Periscope, just listening in through Periscope instead of having called in?
Maybe.
Because from there
anyway, he's here now. So okay.
Oh, perfect.
All right. Hey, thanks for hanging with me, Steve. It was great doing live TV with you.
Absolutely, Coach.
All right, buddy. All right, Anthony.
Enjoy the interview.
Thank you. Anthony, I'm going to make you a panelist because I don't think you want to screen share, but I should hear your voice now.
Can you hear me?
Yeah, I could hear you fine, Anthony. Thank you so much for coming to Face and hanging
You
out with
got it
us for a
sorted
little
out.
bit.
Hey,
Okay.
I'm excited to be here.
You know, I've always wanted to interview you, and you know, we have a few things in common, and I know a little bit about you, but for our viewers on investing.com, we're being live streamed there, and our regular Face attendees. Why don't you tell us how you got to the floor of the CME and what you were doing before that, and what led you or who you blame for getting in the industry?
Yeah, I actually started in the industry by accident. And I say that because I actually got into a car accident right out of high school. And I didn't really have a plan as to what I was going to do, but I got in a car accident, broke my leg. Long story short, I had to do a lot of rehab, so I wasn't really going anywhere for some time. I was actually trying to get down to Florida, which is where I live now. I always wanted to live in a warm climate. So I took a job out of the newspaper for a job
So
as a runner.
you were born and raised in Chicago, Anthony?
Born and raised in Chicago.
Okay, so that you know, I went west, you went south. Yeah, were you dreaming? So as a kid, you were dreaming about getting, you know, you'd be watching the Rose Bowl with 4 inches of ice on your window and see people with their shirts off on New Year's, and then you know all the surf movies from Florida, Fort Lauderdale. Did you dream about it as a kid?
Not necessarily that, but I always wanted to live in like Miami or something like that. And I said,
Yeah.
you know what, maybe I'll try to go to school there or do something like that. And I didn't really have a solid plan, but I knew I wanted to be down here. So
Well,
took a
you know
job as
what
a
closed
runner.
me? Yeah,
And
you
that was
know what
it.
closed me was Jan and Dean, two girls for every guy. You know, that song Surf City. I said, well, you know, I like the probabilities there. So yeah, go ahead.
So yeah, that was it. No, so I came on the trading floor. I started as a runner in the meets. Worked for Lynn Waldock. I did that for I don't know how many months. Then I moved to Refco as a runner, and I then kind of moved my way upstairs to the two trading floors at CME. I worked in the Eurodollar options for just about a year, and then met a friend. I'll tell you a quick funny story. So I was at a wedding. I was 19 years old in Chicago. One of my friend's older brothers was getting married, and at a wedding, and his dad was speaking to a guy who we called Uncle Tony. And Uncle Tony said to me, he's like, "Hey, Anthony, he's like you're on the trading floors." He goes, "I want you to go meet my nephew." He goes, "He's a big shot down there." And I'm thinking, "Oh, great. This is going to be perfect, right? I'm going to finally get a break. I'm tired of being a runner. I've been a runner for over a year now." And
Yeah, you wanted a red jacket, not a blue.
I wanted to be, just anything better than where I was at the moment, which I loved it, but I was looking for something better. So I go to the CME floor and I go, "Listen, I need you to look for this person's name." And they were like, "You know what, sir? He's just not here." And I'm just like, "Listen, I'm positive he's here." Uncle Tony was so adamant that he was there, that he was a big shot here, that he has to be here. They're like, "No." And I'm thinking to myself, you know what? Another person who got the board of trade wrong with the Merc, blah, blah, blah. Well, a few months goes by. I'm in the break room eating my lunch. Sitting across from me, I look at the guy's badge, another yellow coat. It was the exact guy that he had mentioned. His name was Carmen. And I said, "You're Carmen?" He goes, "Yeah, why?" He goes, I go, "I met your Uncle Tony." He starts laughing. He goes, "Well, I work in the S&P." I said, "Really?" Well, we became friends. 2 weeks later, he came up to me and he's like, "Hey," he goes, "I need help in the S&P. It's getting busy down there." He goes, "Would you want a job checking trades?" I said, "Sure." I quit where I was up in the Euros. I went to the S&P and I never left.
Wow, great story. So he wasn't the big shot that Uncle Tony said, but he had
No, but he got me into the S&P.
So in your life he was a big shot. All right, he was a door opener. God, that's a great story, Anthony. So Let me ask you, that time on the floor, you know, you remember it. I mean, even as a runner now, no one wanted to be the low end of the caste system. But man, when I think back at those times, they were really special times and a special place. And, the camaraderie and what people have to go through now to find a place to learn the business. We were fortunate to be able to rub elbows with guys that, you know, made their living off the markets, not just filling paper either. So, did you notice every time from people handling paper in the S&P pit that they were very interested in orders that had STP at the end of them?
Stops.
Yeah. Why do you
Well, I
laugh?
never worked for brokers. I only worked for locals. So I never
Okay.
saw.
They didn't hold decks?
I wish I did.
Okay. All right.
But
Okay.
no, I only worked for locals and I only checked trades. And when I was a runner, I was running for like on the meets, I would just run the filled orders. And to be honest with you, I didn't even know what the hell I was looking at for the most part. And when I was in the Euros, I most of the time was just I was learning ARB at the time in the Euros.
Uh-huh.
And the option stuff, I was basically there really early in the morning to help them run sheets, and do things like that. And throughout the day, I was just more of a go-getter guy. I would just go get whatever they wanted me to get. I wasn't really, it was because I worked for a group. So once again, I was just always working for traders. I never really worked on the broker side.
Okay. You remember audible roars when stops were elected?
Oh, of course.
Yeah. So, to me, that was one of the first things I saw in the gallery before I started my illustrious career as a runner. And, I started to notice that when I ran orders in, they really paid attention to stop loss orders because I think, like now, the way that black boxes use them for coming out of positions, they're almost like magnets for liquidity and at times set at least short-term turning points, sometimes major inflection points. So I just wondered what your experience was with stops. So so you're handling a deck, or you're not handling a deck. You're working for locals. Were you trading then? And what took you into trading? And how did it go for you when you first started off?
So what I did was a unique job, and I think that this is really one of the major differences between the way people learn how to trade now versus the way that I learned the basics of trading. Number one, I couldn't trade unless I was a member. At the time, even for electronic markets, the E-mini S&P wasn't quite launched yet when I was clerking in the S&P, but um, how I learned was, or what I did as a job, which was teaching me how to trade, was I would check all of their trades with other clerks that were checking for brokers or locals. I would do their position and their money. So they'd hand me a card. I take the dupe off. I put the card in my pocket. I clean up the card a little bit before I put it in my pocket. Then I'd look at the dupe and I'd be like, okay, you're short 3, short 15,
Mm-hmm. Mm-hmm.
whatever. And I would go and check those trades and I would continue to keep their position and their money. And they'd always be like, where am I at? Where am I at? And I'd be like,
Right.
and I would tell them that. So what I was looking at, why that helped me trade was because it would tell me, what they were doing. I would always know their positions, how fast they were getting in and out, how big of losers they'd be taking. And then I would really just watch them and feel the pain. Like if one of my guys was getting crushed, I'd be like, man,
Yeah.
I would literally, once you got to know him, I'd be like, man, what are you doing? It's not good for you. Stop it today. And it was like, he's like, you're right. All right, I gotta get out of here. And like the days they were doing really well, I noticed that a majority of them made money, a majority of their money in short amounts of time. So they didn't make money every day throughout the month. They all made money during the busy times of the month. And the rest of the days were grind days. So that was also taught me something that it's like, what, you're not necessarily going to come in every day and make money. And, so I really learned that loss was a big part of the game before I started. So I learned a lot of those types of things
Okay.
at the beginning, working for
All
those
right.
guys.
Okay. So I know I took a course by a guy named Alan Rohrbeck at the Merck called his technical analysis class, and he had us buy the Edwards and McGee book, Technical Analysis of Stock Trends, and I really loved learning about formations and technical trading. What style have you adopted? I know a lot of guys in the pit had guys, besides keeping track of their positions, doing point and figure for them. What did you gravitate towards on the floor as far as technical tools?
Well, to be honest with you, the guys that I worked for, they didn't really use anything technical. They were all pure
Right.
skill.
Right.
I didn't even when I started to trade, I didn't even look at charts.
Okay.
And when I initially started in the pit, what I would do is I would go to the CQG screens, because at the time that was all that was allowed. That's all they had on the floor, was maybe one or two.
It was great. I know people lined up to use them.
Lined up. I used to get there early and I'd print out just basic charts just to see where the market was trending, and then I would go in and at that time I was just trying to, what we would call get an edge. Work the bid or work the offer, and hopefully a broker would hit me, or a local who got a big order would give me some. And so this way you're taught to get a free look. So if I got filled when it was on the bid, I could just work the offer or hit the bid to cover it, to scratch it. So your first thoughts were to learn how to scratch trades. So initially that's how I learned. And that just didn't work out for me, because I was such a small local in the pit that even when I would get the edge to get in, the minute they turn against me, I was always paying up to get out. So it was never really advantageous to even get in. I felt like all I was doing was getting in and getting out for losers. And that's really all I did for a good period of time.
What's interesting to me is what has happened. Now they're bowling alleys, right, bro? All the exchange floors, you could throw a bowling ball down the middle of the floor and not hit anybody. They're so empty that people had to reinvent themselves after the death of open outcry. And they had to learn how to trade, or they became content providers, or they just ended up not knowing what to do. I'm sure you know a lot of people that were great traders that really, off the floor, they couldn't trade. Did you experience that yourself?
Well, I didn't, because I went to electronic right away. So I was not a successful pit trader, and
Right.
I stayed only in the pit for a period of maybe 6 to 12 months. And after I had gone through my first trading account, I had quickly moved to the E-mini, because at the time, like I said, it was not advantageous for me to get the edge. Even if I got hit on the bid when I was bidding, or the offer when I was offering, I still I didn't have a clue what I was doing. So I knew that I was very, in my mind, more technical, and I was like, this is just not for me. So
I didn't like the out trade risk. So, when I was there, I would actually pay the broker to fill it and go upstairs. I learned how to trade off the floor as a, registered rep series 3 guy. I couldn't adjust to the noise and like to look at the whole picture instead of just what's happening in 1 month and one market. So you became technical. What kind of style do you use now, Anthony? I know you have a community and you hang out with guys during the day when you're trading. What's your style and methodology for trading now? What did you gravitate and evolve to?
Well, I don't have a community, and the only community that I use is Twitter.
Okay. I thought, anyway, you've had some great. Go ahead.
No, I said there's some, some Slack rooms that I go in and out of
I see.
periodically, but there's nothing that I am, I'll go in and just chat with different friends and different, groups. But I honestly haven't even been in those, and for, I would say, at least, I don't know, probably even been a year since I've even been in Slack now. But over the past several years, I have done a few of those. But
what are you trading now? What you still focus on S&Ps?
S&P, and I trade the 10-year Ultra.
Okay. Is that an ETF? The 10-year Ultra?
The 10-year Ultra is really, it's a product that CME created. I'd say it's about 4 years now. I don't know the exact time, but I've been trading it for about 2 years. I used to trade the 10-year quite often, but the 10-year Ultra it's the actual 10-year. So like the 10-year that we all know as the 10-year is
Right.
actually, I think, comes out to like a 7.5 year on delivery. So they created one for delivery, it would be 10 years. So they created ultra, 10-year and 30-year ultra. And it's
Okay.
not as, doesn't have as big of a book as
What's a symbol on it?
I like
Do you
it.
know?
Well, it's not, they don't do it. Really, it should be just TEN is what I use.
Okay.
It depends on, I think, what platform you're using, but on
Okay.
TradeStation, what I use for charting, it's just TEN, and they don't really even have a continuation chart yet for it.
Wow. Okay. All
I
right.
don't. Yeah, so that's what I trade. It's basically the 10-year. It moves very similar with it, but
Yeah.
it has a little bit more slippage, which I like. It's not as the book isn't, several thousand up, which I like. And then I trade the S&P, but I don't trade the S&P every day like I used to. I trade it, when it's busy. I'm actually headed to Europe not too long from now, and I'm actually on holiday for the next few weeks. But
Okay.
yeah, I know it's funny. I was talking to a friend yesterday. I said, sure, I'm going to be gone this week, next week, and the week after. I said it's going to be really busy. It's funny how that
Everything
always
will
works.
happen. Are you day
It was
trading? Are you swing trading? What kind of trading are you doing?
day.
Day? Okay.
Yeah, I don't. I do some swing now. I definitely have. I used to be a lot more of a hardcore scalper.
Hmm.
I did that for many years, but for the past, I would say since 2012, 11, 12, 13, somewhere in there, I've moved definitely towards more holding intraday. I watched the first hour. You asked me what was more my style now. So I watch the first hour every day, and then regardless of what market I'm trading. So if it's the 10-year or if it's the S&P, I wait to see how the first hour closes. And then I'll trade directionally based upon how it closes around support or resistance. And then
Okay.
I typically will have a position on, and then I'll scalp around it. So I trade around a core position, but I'm typically one direction until an objective is hit or until I'm pushed out of that, stopped out of that position.
That's a great segue, objectives, because, it's one thing to make a great call. It's even better if you trade the call and actually have skin in the game instead of just making predictions. And the most difficult part for most people, I'll include myself, is to turn it into a great hold. So even if you're scalping and you talk about objectives, what keeps you in the trade so you're not getting out, or maybe you take partials until your objective is reached? Do you manage it from a higher time frame? I think a lot of people have trouble being patient, waiting for their targets, and leave a lot of pips on the table. So how would you advise people to, not be a victim to what I call first daylight syndrome, where, you might be risking 50 and you're up 30 and you take it?
So what I do is, first of all, I think that this is a big reason why I'm excited for the micros, the S&P, because I think that the contracts that are a little bit smaller, I think it's important for people to be able to trade multiple contracts
When are
because
they going to launch that? I
micros
didn't even.
were launched. They were launched last month.
Oh, wow.
So, yeah,
Yeah.
the micro minis are launched, and
Because I love micro FX for people that are
yeah.
learning. Yeah, go ahead.
So the micros, I think. So the reason why I even want to mention that is just really because I believe it's very important for people to be able to trade using multiple contracts. Because for
Yeah.
me, what I do is I get on a core position that I feel that I am comfortable letting that position work
Yes.
through all of the noise. Okay. So I am in something that's small enough to where if it goes my way right away or it goes against me right away, I don't feel compelled to have to cover that position. The
Okay.
second thing that I do, because I have an active mind and I'm always wanting to be in and out of the market. So what I do is then I'll trade on a shorter time frame levels in the direction that I want to be around that core position with tighter stops. So I will, sometimes that will hurt me, sometimes that will help me, but ultimately it keeps me in that longer term, even though it's only in a day position, because I'm active around that position. And what I do is, and I'm sure a question would come up is, well, what happens if you start losing more than what you were even risking on the initial core? Well, I don't let that happen. If it does happen, then the trade is it's kind of done.
Right.
Then I've just scalped myself into a pulp. But for the most part, that's how I've learned how to hold winners is to or to hold trades through to where I think until they're not working is
Yeah.
to just be smaller. And if you want to be active, then you trade around that core position. That's what I do.
Right.
Psychologically, that helps.
Yeah, yeah, and partials because you're taking part, you're putting money, you're getting paid, and you're
Yeah.
still there if it turns out to be exactly what you're expecting. Anthony, you've opened my eyes to a few things today. The TEN and now micros and S&Ps, and was wondering if you'd be willing, and you probably are, since you put it in your Twitter here, survived a heart attack at 36. What happened, bro?
Yeah, 36 years old, actually at my trading screen, and was an interesting day to say the least. But yeah, no, I had a heart attack, and it's one of those things where at the moment it was happening, I didn't believe it, but luckily, I mean, I give the whole story on a podcast, right? It's on Futures Radio. You can go listen to it. I don't want to get
Okay. All right.
but it's basically I was there at my screens and I wasn't feeling well. Chest pains went into my arm, into my wrist. I didn't believe it. I went next door. I took 2 aspirin. I sat in my car. Next thing you know, I drove into the hospital, and they, within an hour, they told me, they're like, you know what, you're actually having a heart attack. It turned out that a lot of it was related to stress, and I didn't have a blockage. So that was good news. So I've made a lot of changes in my life, to say the least.
Yeah, something like that really changes you. How about your perspective on time after that?
Well, my perspective, honestly, on just so many things has changed. But just I look at things now as is just that if you want, I guess the one thing I look back at my career was that, and I think that when you have something like that happen to you, it opens your eyes to whatever it is that you want to do. And if you love doing it, I put so much pressure on myself. I mean, I think that was the one thing that I look back and say, I didn't really enjoy life when I was losing. Not always the case, but a lot of times. So a lot of the pressures and the stresses I felt in the business were things that I put on myself. Um, so I also realized that I needed to put just as much time away from the charts as I did into the charts to have a long sustained career. And it's been over 5 years now since that happened. And I just feel so much more balanced on a day-to-day basis. And I don't put the pressure on myself that I used to. So many things have changed for me.
Great life lesson. You do have a great radio show and some elite guests.
Somebody actually sang to me on one of them, if you remember.
Yeah, in fact, I'm showing it here, Anthony. So let me ask you this: did Futures Radio spring out of that event where you just, I love teaching and interviewing people, and I had an event 5 years ago too. Isn't that interesting? So, surviving cancer, and I reinvented myself into more of a mentor and teacher and host. Did this Futures Radio program was spring forth
It did
after
spawn
that?
out. Yes, it did, because I felt that I wasn't trading as active as I used to. I was actually forcing a lot of things, and I was doing some media on the floor of the exchange and even remotely for the networks and other things. And I said to myself, you know what? Why don't I talk to people that I know? And that was just one of those things in those moments where you're just laying down thinking about ideas. And I said, you know what? Why don't I start doing this? So it did spawn off of that. Yes.
Okay. And how do people find it? Because on your Twitter handle, you don't have, it's not set up. You don't have a Twitter for Futures Radio, do you?
No, I don't. It's just me. They could find it on my YouTube channel at Anthony Cordelli. There's a link on there, or they could go to futuresradio.com. So
okay. All right. So the best way for people to follow you is on Twitter and to listen to your podcast and your YouTube channel. So you have 3,000 subscribers. So it's growing very nicely for you, Anthony. I'm so happy for you, man.
Thank you, Dale.
and it's always great talking to a kindred spirit who had a similar journey, and even health wise. And I'm so glad that you survived, and because you're doing a great service interviewing traders, interviewing people that help other people, and providing great content and sharing your story, Anthony. So great legacy you're building in the business, and I hope your show grows, and eventually, you know, you replace CNBC, which I keep the volume down on.
Thanks, Dale. I appreciate it.
Buddy, what do you think? I mean, with this new world of media, you could have your own financial station. And I think you're great at being a host too. Turnaround's fair play. And thank you for coming in, and thank you for interviewing me earlier in the year, Anthony. I consider you, like it or not, buddy, my trading warrior brother.
Cheers, Dale. Thank you so much for having me. Thanks, everybody.
All right. Oh, one question I have from the audience.
Okay.
Do you mentor?
No.
Okay.
I try to do it through the podcast. I try to do it through social media. If somebody has
Okay.
questions, if they have anything for me that I can help them with, I'm more than happy.
Okay. You're natural if you ever decide to do it, and it's pretty rewarding. I get as much pleasure out of the people that I work with doing great in the market, even if I'm not there. So just food for thought, bro.
All right, buddy. Thank you so much.
Okay, that's it, everyone, for Thursday. Good hunting the rest of the day. And thank you, Anthony Crudelli, for a great time. I had a great time. Hope you guys enjoyed. And don't forget, don't just count your pips, count your blessings. See everyone to wrap up the week, TGIF tomorrow. You're welcome, Scott. You're welcome, Deandro. Thank you again, Anthony. And we'll see everyone tomorrow. Adios.